So let's start with a look ahead to next week specifically. We have a number of software companies that are set to report earnings today and tomorrow. And we're starting with Zoom after the bell today. What is the most important thing from Zoom that you're going to be keeping an eye out for?
I think there are probably two things. One is how is gross retention and net retention holding up? And then the other thing is if we get any kind of breadcrumbs or initial outlook for 2026 growth. Those are kind of the two things that we're looking for Zoom tonight.
How has Zoom's retention been trending in the last year or so?
It's been, I think, steady. And it really depends on which segment you're looking at. Now, remember, Zoom, we are using Zoom right now. A lot of businesses or enterprises use Zoom as their primary video platform, and that's been pretty durable. But call it the consumer use case, their nomenclature that the company uses, it's called online. The online retention rate, in 2020 and 2021, you had your I don't know, book clubs might have had a Zoom license, or Cub Scout troops might have had a Zoom license that in 2025 they just simply do not need because they're back to meeting in person. So the gross retention rate for that cohort really suffered in 22 and 23 and 24. It has also stabilized, but the gross retention that we really care about is more in the enterprise, and that's been pretty stable and actually improved.
How fast or how slow is Zoom growing these days, and how does AI play into that story?
Zoom, low single digits. I think we have 3%, maybe 3.5% looking out into 2026. So call it, I don't know, CPS or CPI plus or minus, a percent or so plus or minus. And AI is interesting because there are a few ways that Zoom can play in the AI space and actually generate AI revenue. One is just right there in the Zoom application where you can record things and have transcripts be summarized for kind of automatically given maybe a sentiment score by an AI agent from Zoom. And then they also have a contact center business and a phone business where AI agents can handle some of the incoming contact center requests or some of the issues that might come in. And so they can actually charge money for artificial intelligence revenue to maybe offset some potential pending headwinds on a seat count basis, where maybe in 2024, you needed 100 people to be answering phones for you. And in 2026 or 2027, you don't need 100. But they can supplement some of that potential loss in revenue by selling AI agents.
That's really interesting, Jackson. I mean, is Zoom actually seeing traction in that line of business so far?
They are. They are. I don't know exactly, how much of their total revenue is going to be generated from AI agents at this point in the next 2 or 3 years. We cover a number of companies in this kind of contact center and communication space. It is still early, whether it's Zoom or Five9 or Twilio. I mean, there are some AI, there are real AI revenue being generated and attributed, but it's just still, I think, a little early to be able to look out the next 2 or 3 years and say, oh, this came from AI or this will come from AI and this did not.
Yeah, no, that's totally fair. I mean, I guess expanding our Zoom to broader software earnings, we have a few other companies. We have Zscaler and Workday that are also reporting tomorrow. And I noticed that both of them have been growing quite a bit faster than Zoom. And I was wondering what's behind that. Is it AI or is it something else?
Oh, I mean, I certainly follow Zscaler and Workday. I don't cover them formally, but I would say it's not just AI. I mean, Zscaler and Workday are, I would say, more in their kind of secular growth phases, particularly Zscaler from a security perspective, and Workday being a kind of a classic SaaS company. SaaS companies are still generally growing in the double digits, and Workday has the ability to drive increased sales from their channel, cross sell HR revenue with financials revenue, or I could say HR software with financial software to generate additional revenue. Whereas Zoom just had this massive pull forward of spend in 2021 and or 2020 and 2021 that they are still kind of working through at this point.
I mean, speaking of software companies that are a little bit behind in terms of growth and how they stack up with the rest of the cohort, another one I think a lot of investors are going to be looking at that I've been watching closely is Salesforce. They've made this big AI push recently. They've been talking a lot about AI agents, and they're set to report after Thanksgiving. What are you going to be focused on, Jackson, when Salesforce comes out with their earnings next week?
Yeah, it'll be the first time that we've heard from the company since their Dreamforce event and since they hosted a financial event, an analyst day. What I'm focused on are, I would say, two areas. One is, okay, the company expects their net new AOV to be able to grow faster than and AOV is kind of average order volume or annual recurring revenue. Just think of it as the current run rate of the business. So their net new ARR is expected to grow faster than the existing ARR. Just by math, that means that the company should accelerate their revenue growth. They expect this crossover to be happening kind of now and at the end of their fiscal 2026, which is calendar 2025, and hoping that that can lead to overall revenue acceleration by the time we exit, maybe this time next year. So what we want to hear is, how's progress on that goal? Are you still growing net new ARR or net new average order volume faster than your existing base? And if that is the case, then they're still on track to be able to re-accelerate growth. The other thing that we're looking for, those core clouds, so Sales Cloud and Service Cloud and even Marketing Cloud, how are they holding up? And are they going to be able to maintain their high single-digit growth rate for the next few quarters until this AI play in Agentforce and Data Cloud are maybe able to take over kind of the engine of growth when we get into next year?
Got it. I mean, it is still sort of early in this game, Jackson, but I was wondering if you had a view on which legacy software companies have done a good job bringing AI products to their users and maybe which ones haven't done quite as well with that.
Legacy software. I mean,
The companies that you cover, like in the public
yeah.
markets.
I mean, I'm just thinking. I think you probably have to list Microsoft first, don't you? I mean, they were early. I mean, they were early in. If we think about, okay, the Chat GPT moment was what, 3 years ago, almost to the day, right? November of 2022. And Copilot, Microsoft Copilot, that was launched and announced the following spring and summer. And so while, there's been a lot of back and forth and consternation about $30 per user per month and how valuable is it, and are enterprises adopting it, I still think that Microsoft, through its incredible distribution into basically every single major company that exists, they have been able to sell and cross-sell Copilot and put really, really valuable AI features into their existing license base. So I think they're probably, they have to be number one in terms of companies that are actually monetizing AI in their applications.
And what about ones that maybe haven't done as well, or you think will still continue to struggle and have challenges catching up in this race?
Oh, I mean, we just talked about it. Even though we are believers in Agentforce in the long term, I think that, again, the things that Microsoft really has been able to drive through its sheer distribution, being able to cross sell into its base. We think that Salesforce also should be able to do that with Agentforce, but in our initial conversations, it's just slow going. There's a lot of data cleanup that needs to be done. There's a lot of change management that needs to be done. And also, I think, there's some product innovation that also needs to happen outside of the kind of initial most obvious use cases, which are, like we said, service oriented or contact center oriented, and then business development reps, which is, hey, can you go out and maybe source a few hundred leads for me, Mr. or Mrs. AI agent, and do an acceptable, better than just a passable or acceptable job, actually show that that can generate real returns for their customers. So yeah, it's been slow going, and I think that's probably reflected in the share price for Salesforce. And then the other one is probably Adobe. Adobe is just in a very difficult spot. They are competing on the merits of their model, like for like, against some of the most well-funded and well-resourced AI companies, whether it's OpenAI or Gemini or others. And that's just a really difficult place to be in if you're Adobe, because they have this fantastic creative cloud business and editing tools in their creative cloud, but people are interested in trying to come after that near monopoly and disrupt it.
Well, I guess we'll have to wait and see till after Thanksgiving how Salesforce fares. And I think it'll be a bit of a bellwether for the rest of the sector. So thank you so much, Jackson, for coming on again and talking to me about software.
Thanks, Anita.